Good evening, this is Nick Inman from VolumeProfileTrader.com on Thursday, April 5th. And just a heads up, markets close tomorrow, but the jobs report is still coming out. And the futures market, the S&P futures markets, well, as futures markets in general, open till 9:30. So there hopefully will be some type of trade. I plan to see if I can get a trade out of tomorrow's number. If it's an inline number, we'll probably get a little movement. But if we have a beat or miss, with decent magnitude one way or the other, it's probably going to be a good trade. And really, I'm going to zoom in a bit down to 6 months and just focus on basically this rally that we've seen, focus on the volume from that rally or from this rally. And what I'm really looking at is if we hold these current lows, which the market's consolidating in, then we probably have a decent chance to make new highs. As far as doing it successfully. Now, the main thing is recapturing the top end of this range and seeing the buyers push it higher. If we can't, and let's see the exact date. It started really on the 13th. And we've held those lows, or basically the top end of that range on the 13th, and we've been trading ultimately sideways ever since. And we see that the market appears to be topping out, but there's no way for certain of telling, which way it's going to go. Now, the trend is definitely still to the upside, but it's not what it was at the beginning of the year. This is the biggest rough patch we have seen in the market. And obviously you have people taking profits from those who did get into this rally. But you also have people who are trying to buy more by the weakness, which is, they are, considering the trend is still to the upside, they're doing a decent job of keeping this market up. I'm sure some of that is some short covering too, people trying to call tops. They'll get 2 down days, 3 down days in a row, and they'll get scared and they'll have to cover due to the buying coming into the market. But where I'm getting at is, let's get to the important stuff, right? If we break down and this market starts moving lower, currently trading at 1390, your first target it's going to be this 1370 level. You can see it's the top of this big high volume. And if I zoom in a little bit, is the value area low and high for February and March. So it's an important support or a potential support level. Let's put it this way, it's an important price level. And then from there you really look down to 1336 to 1340, 41. That was the low end of the range in February. And in February, the point of control was at that 1340 level, which I will show you right here. 1340, February's point of control. You can see it was a good bounce for really almost a 100-point S&P move, and that's impressive. So it's something to take note. And really to make it as easy as you can, the current pivot I would consider is March's point of control. You have a potential double top right here. And let me get rid of some of these drawings and then redraw. You have a potential double top. And then you have what's been good support in March, this 1385 level, and then you have, we'll call it the top end of this high volume in March, which is 1401-ish. Notice in April, the market bounced off this 401 area, pushed higher. We had a 2-hour bar where we had a nice bounce, but the sellers came back in and faded this bounce. You had one more 2-hour span of buyers holding these levels, and then you got a flush. And where did it flush to? The bottom. If we got a pullback or some type of pullback basically to February's point of control. March's. and then they faded that and got it down to 1385, where so far we have bounced. Now you can see from there, you still have sellers fading into this. So it kind of looks like what happened here, where we got a bounce off support, faded, and then you had a one-hit wonder in a 2-hour bar that was positive, and then a continuation to the downside. The only thing that's different between now and then was this low so far isn't at the lows. So you're not at breaking support, you're actually at an interesting area. That interesting area being the point of control range, or really the exact point of control of the week prior to March option expiration. So let's call it the 10th or something like that. And so far we're doing a pretty good job. Well, we're holding those levels. And going into tomorrow, going into next week, if we can hold these levels, our next goal is to recapture this 1400 level, get back above basically this week's point of control, and go test last week's point of control. If we can get above that, which really 1405, you could see another push to the upside. Now, I have to say this market looks like it is bound to roll over. So you kind of have to look at the potential downside targets. 1340, as we talked about earlier, you could press it, potentially press it down to there, but 1370 is your first target. So that's your bottom range that you're going to see buyers or short sellers looking to cover their position. So, basically don't be naive to the fact that this dip is going to be bought again. We've ran the same amount as we ran with QE2 being announced back in 2010, 2011, and the market's due for rest. We could easily see a range-bound market from 1340 to 1420 until the market makes up its mind what it wants to do. The point is, we've had a nice run, and really the idea is if your stocks are starting to falter that you're holding, it's probably time to really scale back on these positions. You don't want to be in a position where you're giving up gains where you once had 40 to 50% year-to-date returns, and now they're down to, which are still good obviously, but 20% because you just thought the market was going to continue higher. Now, eventually, let me bring back up the daily. The market will, in some magical point in time, the market will top out and go further than, not top out meaning, the top of a rally, but go past 1419 on the S&P, and this is just going to be what looked like at one point in time a squiggle on a chart. But for now, it's what we have as far as price action. And if you were lucky, hopefully if you've been following along, you've had really nice gains. The last couple of days have been tough trading for going long, and that's actually led to a few losses recently. But overall, one thing you can do as a trader, if you are at the screen more than say 2 hours a day looking at the market, there are opportunities in like the S&P futures, and if you take the time to learn and study volume profile on a smaller time frame, which focuses on the day, the week, and the month as far as volume, and then learn the price action on a smaller scale, this is a 1600 tick chart, but 1597 is the Fibonacci number that most people use. Why Thinkorswim doesn't do the more common numbers, I'm not sure. The only two that are the 144, the 233. The rest of these, they're close to Fibonacci numbers, but not quite. But anyways, I really digress. But where I'm trying to lead to is, you can use volume for opportunities to buy and sell and capture gains on an instrument that has great leverage. So, for example, going into today, you see yesterday's high volume at the top end of the range around 1397. You also have the point of control for yesterday at 13.92. The market opens this morning at 9:30. What do? We push higher into this 13.92 range that we talked about, and what do we get? We get a nice opportunity to go long up to basically the top of yesterday's high volume area, and that was basically where we broke down from the Fed minutes, stabilized, and then pushed lower. So, and actually that's not right. What I meant to say was we stabilized before the Fed minutes and then pushed lower. So there definitely are trading opportunities intraday, that days like these, or I should say periods like these, if you're patient, you can get one or two really solid trading opportunities intraday on the S&P, and it's not, I would say 1 out of 20 days are just days where, there's absolutely nothing. But even really when the market starts to pick up volatility-wise, that's when you'll have anywhere from 8 to 10 real good opportunities to make money in the S&P futures market day trading. So you combine that with having the ability to look longer term on a chart, it pays dividends, and you can take advantage of these 10-point ranges in the S&P, and it doesn't have to be going long only. And I don't recommend going out and just jumping into the futures market. You will lose, you will blow up an account that way, I promise you. But if you study it, if you trade, paper trade, or trade using, a simulator on, for example, Thinkorswim, which by the way gives horrible fills for simulating. They're not real market fills. They're pretty much, if price hits it, it'll fill it. But I continue to digress. But I guess the point is, you should be only, as far as your stock account goes, you should only be in positions that continue to work. An example would be Las Vegas Sands. Despite the fact it's in a range, and it's been trading in a range for a couple weeks now, we are still at the top end of the range, and there's really no reason to sell this after its most recent breakout. Last time we were at the 20-day moving average, it was paid off to be a buyer. We're getting, it's showing us right now, not only are we at the 20-day, but it's showing us buyers are still coming in and supporting this. So, and I'm just using the 20-day because it worked the last time, so just looking at it again, trying to figure out a pattern. But this is just an example. Obviously, Apple is another example, hitting another 52-week high today. Priceline is another example, another 52-week high. A name that I just bought today, started to scale in, is CVR Partners. This is one of those market value PEs with ridiculous growth rates that is still, and I'm going to zoom out some. Not only is it this was the IPO, but not only is it continuing to trend higher, it's in the lower end of the range of this channel, and the upper end of this channel would lead you to, let's call it $32 or so. So not only do we have a low value, high growth play, but you're at the bottom end of the range and you have a pretty decent upside. And this is one of those stocks that you can just kind of hold. So you continue that. Las Vegas, like I said. American Express still does well. MasterCard, another 52-week high. Visa, another 52-week high. So this volatility squeeze that we talked about the other day, it ended up working out. It's just kind of a slow grind higher. And eventually this is going to stop and we're going to top out and go lower. But for now, there's no reason to really get away from this name. Whereas a name like Freeport, it looks like it's about to fall out the bottom end of this, this Bollinger Band. And you're against this 1 year point of control, and now you're getting sellers against it. To be honest, I am using option spreads. I'm short Freeport, and I wish I caught it and basically when I was nibbling on it, I should have been applying this bearish position, but I didn't, so it doesn't really matter. But ultimately, I'm looking for a retest of these lows on Freeport, and it's really not much more than that. If we start to roll over in the market, Freeport's going to dive, and it's going to dive quick. Similarly, Cliffs Natural Resources fading off the 200, off this point of control for the year. This looks like a monster short, and it looks like there's plenty of downside left in this. A good $7 easily. Kind of reminds me of gold futures, as much, not gold futures, gold in general. As much as I believe gold will go higher than 1923, in the next 5 years, we're stuck in a range right now, and right now we're pressing down to the bottom of the range where buyers should be lurking. Now, there have been trading opportunities to the long side, and I've been fortunate enough to catch nearly every one of them, but the trend has been down, and sometimes when you have such a bullish thesis long term, you can get, the short-term trend can beat you up a little bit, and that's what's going on right here with gold. I've, done really actually fairly well, but there's no reason to think that this name, gold in general, it could stabilize here, but it could also press down towards 1550 again. And the reason why it could stabilize here is because you have support back in October. You have what should have been support ended up being resistance, pushed through it, pushed down to this 1525 level, and then basically that whole level was rejected, and we went from the bottom end of this range to the top end. That leads you to believe maybe this is support still. We'll find out because we're back at those levels. So what we'd want to see is price stabilization. Here's another example. You break it down to a smaller time frame. And what you have right now is gold above this week's point of control, so that's positive. But you have a lot of regret in this range, this 1650 north range, that have bought, and they're looking for their money back. So you look at the high volume area in this range, and it is 1714 down to, let's say, 1644. You have a ton of volume in this range, and it's just a group of people who want their money back, and it's really not much more than that. Your first target would be basically recapturing this 1650 level, which was support last week. It was actually where we got long for a trade. You should have gotten stopped out when it started to tumble, and maybe you took the gains. It did get to 164. The GLD, that's what our spread was too. If you didn't take it off on Monday or Tuesday morning, you pretty much got stuck and taking a small gain, or hopefully not a loss, but a break even. So let's back focusing. Sorry, I'm digressing a lot, but I think all of this is really important, and I feel like I'm doing a decent job breaking down, the levels that you should be writing down and noting. So what you'd be looking for is gold to push off of this high volume level back up to this 1650 level. Now there's going to be selling pressure at those levels. If there's not, and basically we break through 1650, this could be a potential bottom on gold, and you would be looking to buy back around the 1650 level. Now, the best way to do that for most people is going through the GLD. I recommend call spreads because they help reduce risk, even more so than just buying the GLD outright. So right now your low is 1613. You want to see this high volume area hold. If we do, you want to see 1650 from there. Let's go with 1665 because that was last week's point of control. And then ultimately the 680 to 690 level, which was the top. You had some high volume here from this week, and then last week you kind of combine them, and you get 1680, 1690-ish. So just keep those in mind. Now some earning plays for next week. Looking at Alcoa, this is leaking out the bottom end. You'd have to recapture $10.30, which is the 50-day. It's the point of control for the year. Alcoa sure looks like it's going lower, and it looks like it's going to retest the $8.50 level. If to speculate, maybe you want to buy the 9/8 call spread. I'm sure it's worth probably 8 to 10 cents, and I would go out to May, and or you can do April, and you'd be looking for a quick flip, but something like that may work out. If you're if you're going to April, maybe the 10/9 call spread's more in line. It probably suits the risk parameters more, and you'd be looking to take that off, obviously around $9. But Alcoa looks like it's going lower. Super Value, don't even touch this, but this goes. This report's the same day as Alcoa. J.P. Morgan, you want to see a pullback to 41.43 to call it 39.5. So 41.5 to 39.5, 2-point range. Basically, where it broke out from, you want to see it retrace, and that's where you want to be a buyer if you're a believer in J.P. Morgan. I don't think you'll have a problem getting that type of pullback. And just so you know, 2-year point of control is 39. Let's call it $40. So it would be retracing the move made from when the stress test reports came out and J.P. Morgan raised their dividend or something along those lines. Wells Fargo, it's right at resistance, and sure, I have to say I do believe this is going to break out to the upside. Do I want to be buying now? I want to be buying when you kind of look to be buying J.P. Morgan, which is on the pullback back to this $31 to $30 level. You see the high volume, and your thesis would be this from $29.50 down was complete rejection in Wells Fargo. Now we're starting a new trend to the upside, and I'm looking to be a buyer on the first major dip, and the first major dip would be down to this 31 level. Now, you basically are hoping for some type of bad news to happen. So you can see, while short term, the S&P, looks kind of scary. You look at names that Warren Buffett, who has been nothing but a good person to follow, look at Intel, look at IBM, since, he basically came out saying he was buying them, he was gung-ho on Wells Fargo and J.P. Morgan. So those are two names maybe you should have on your long-term, basically, portfolio holder. And really, from there, that's really it. I just, I hope this helps some. I kind of digressed a lot, but I didn't really have any names to cover because not a lot is worth covering right now. We're in a stage where there's consolidation. There's no defined trend, and therefore you could just kind of gotta wait and sit. I've been trading the futures markets a lot more, day trading, rather than trying to initiate new positions. Like I said, the only one I didn't initiate was UAN, is the ticker CVR Partners. Now, if you want to go and buy this company, just realize they trade about 200,000 shares a day on average. The bid-ask spread was like 4 or 5 cents, and so don't just go out and hit market. Try to get a better order than what you normally would. Realize it's at the top end of the range, and I only bought about a third of a position size, but I do think that these levels hold and we push higher, so this is why I'm a buyer. Just to let you know what UAN does for a company. They manufacture nitrogen fertilizers with petroleum coke gasification process, primarily for agricultural markets. So, yeah, and I'm reading this off of like a finance site. So, basically what you're looking at here is a PE of 14, a growth rate of 34, and a dividend of 8.6%. Now, they do have some debt, 26%, but it's a low beta stock relative to the S&P, and you know, you have a good growth rate, and you have a good technical looking chart. So that's why I'm kind of looking to play long. So anyways, this is a long video. Hope this helps. Take care. Have a good night.